Well, let's focus on the infrastructure space now. And Dipan, I want your thoughts as well. But we have someone who tracks this space, Ankita Shah, who's the Vice President Research at Elara Capital, is with us. Ankita, thanks a lot for joining in. First, if we can just start by telling us what your overall call is on the infrastructure space. What is the stocks that you're most bullish on now? And then, of course, we'll get to individual names as well. But what's the overarching view now?
Yeah, so we are very positive on the infrastructure space. If you see last year, FY24, the awarding activity has been muted, but post-elections, we're expecting the order awarding to pick up significantly on the government orders. But in the meantime, state governments have been very active. Recently, MSRTC has announced a lot of new packages that are opened up, and multiple infrastructure companies have emerged as L1. Like PNC Infra Infra, NCC, GR Infra, which are could be key beneficiaries of these project awarding. So, in the absence of central government orders, state governments and some private sector orders are also continuing. And post the elections, a lot of ministries have been working on a 100-day plan post election, which we believe could lead to further boost in new project awarding going forward.
So you mentioned a couple of stocks, right? And we had them in focus yesterday as well. Let's talk about them. PNC Infra, I think total orders worth 5,000 crores is what the company is looking at. From this price, what kind of stock price upside and earnings upside are you factoring in?
Yeah. So overall for the infrastructure space and the key companies that are in discussion, we are expecting at least a 20% earnings growth on the current numbers. However, given the buoyancy in order awarding pickup, we expect a lot of these companies to raise the guidance in terms of new project awarding going forward. If that happens, then the visibility on new projects improves and the earnings upside could be higher than that. But currently, we are working with approximately 20% earnings growth over the next 2 years, FY24 to FY26.
All right. Hi, Ankita. Good morning. Nigel on this side, and good to see you. I want to ask you about the big boy, L&T. They came out with their set of numbers. The street didn't like their guidance, I think, and even the margin miss. Your view on the stock at current prices?
Yeah, so L&T remains one of our top picks in the space. Despite global headwinds last year, I think they reported very good performance for FY24. On inflows, on performance on the core ENC side, net working capital improvement, and ROE. So on these fronts, they have delivered well. On this high base, the growth pace, the rate of growth is expected to slow down, and which to me, I don't think is a surprise. So we believe with the strong order book that they have, almost around 5 lakh crores of order book is what they are sitting at. It's almost a 3 times book-to-bill visibility. We believe the momentum is likely to continue. Also, the order prospect pipeline is much better versus previous year for the domestic markets. So when last year the international markets contributed to the inflows, I think this year domestic will pick up significantly for them, and that should help the momentum to continue going forward. So we remain positive on L&T.
Got it. Ankita, just one thing, across your coverage universe, if you can just name the top 3 recommendations from your side.
So among the large cap space, we like L&T. Within mid caps, we like LG Infra, PNC, and NCC are the stocks that we like. Reason being, not just they are sitting on good order book and leverage position, but also being diversified in nature. They are not dependent on any one particular segment to do well. They can get orders from multiple sectors. That's all.
All right. We'll leave it there, Ankita. Thanks very much for joining us, and we'll have you back soon again as we get past that election verdict. And I think infrastructure is going to be really top of the list where market expectations are concerned. But